Greetings and welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor for wealthmanagement.com's RPA Edge omni-channel. I review all of the industry stories and pick out the 5 most important ones, providing open, honest, and candid discussion you will not get anywhere else. So let's get real. First story is about crypto and DC plans. Well, there's a big buzz over digital assets. The recent DOL warning may temper adoption of 401k plans as they caution plan sponsors to exercise extreme caution in a compliance release. There is concern about fraud, theft, and loss. Recently, we saw For Us All add cryptocurrency through Coinbase, and Betterment purchased Makata, so we expect maybe they'll be making cryptocurrency available on their platform. And we saw iCapital raised a bunch of money as offering crypto and IRAs. Is there really a demand? The biggest demand, if there is any, is from younger investors. Yet a Morningstar survey showed that less than 5% even of the younger investors were interested. Seems like a lot of risk and little demand, unlikely to gain traction anytime soon in 401k plans. Second story is the Secure Act 2.0 did not make the latest $1.5 trillion appropriation bill. Although there is bipartisan support for retirement reform, it is not a top priority, especially with the war in Ukraine, inflation raging, and still issues around the pandemic. Promoters are optimistic, but it could be quite a while before Congress can focus on retirement. And if those remember, there were similar issues during the Bush administration when the entire retirement system seemed it was likely going to be overhauled and simplified, and then the war in Iraq began. Third story is about inflation concerns. Though the economy and job market is strong, U.S. consumers, especially baby boomers, are concerned about the economy, especially inflation, according to a survey commissioned by Nationwide with 2,000 people, which could affect retirement planning. Some are considering delaying a family and retirement, while others are looking for higher paying jobs and reducing their 401k contributions. Stay tuned as the stock market is due for a downturn at some point. Could also cause consumer concern, which could affect the 401k market as well. Fourth story is about the demand for ESG. According to eBree research of 32,000 participants in public DC plans, the demand for ESG is higher among younger workers, though older workers have a higher asset allocation to ESG. 40% of public employees in their 20s are interested in ESG, but they tend to have a lower account balances, and with just 13% allocated of their assets allocated to ESG versus 17% for older workers. Women are more likely to invest in ESG in these public plans, but overall, the median amount of assets is 1% for ESG. So is there significant demand by ESG? Should RPAs be proactive or reactive? It really may depend on the type of organization and the demographics in that plan. And then the fourth story is Intellisense, which is an elite RPA firm focused squarely on the convergence of wealth, retirement, and benefits, and especially focused on the 97% of the underserved participants, is partnering with eMoney to offer clients a private label financial planning app called Life Steps. Intellisense has focused on the tough issues: engagement, serving the underserved, and helping participants in selecting the right benefits through technology as well as their telephone CFPs. This is available to RPAs, other RPAs through eMoney, and it's definitely worth looking at. So those are the 5 most interesting and important stories from the past week. Please let me know if I missed anything or if you have any comments. Otherwise, I will speak to you next week on 401k Real Talk, available now on wealthmanagement.com's omnichannel RPA Edge.